Hey folks, it's wonderful to be with you today here on Lord and Richards Radio, and I'm excited to be talking about our subject of taxes today. I know that's not exciting right out of the gate, but I promise you over the next 3 episodes, we're going to have a great time and we're going to save you a lot of money. You know, the people I'm talking to every single day, just like you, are concerned that things out of your control are going to mess up your retirement. Things just like taxes or volatile markets or government policies and decisions. All of these things can have an impact. And what we do here on Lord and Richards Radio and what we do when we meet with you in person in our beautiful offices is that we talk about ways you can develop a plan to be financially independent without worry. Not worrying about what the government's going to do to taxes, not worrying about what the future may hold. And so that's what we're going to be talking about today. And here's really my primary issue is that I feel that for most of you, I believe you're going to pay too much taxes on your retirement income. I believe you're going to pay too much taxes on your retirement income. And so we've got to figure out a way to get rid of that excessive tax bill. You say, well, Colin, what are you talking about? Is it because the government's going to raise rates? Well, I certainly believe that the rates we have now are a window of opportunity, and I'll talk about that in a subsequent episode. I believe that the rates we have are historically low, and they have been since the Tax Cuts and Jobs Act was passed many years ago. That act is going to expire at the end of 2025, and we're going to be automatically pushed into higher brackets unless Congress gains the will to somehow decrease brackets once again. So we'll see what happens. Stay tuned. But on the assumption that if we're in historically low tax rates right now, it would be wise, wouldn't it, to plan for higher rates in the future. So one of the ways that I'm concerned you're going to pay taxes excessively in retirement is taxes on the withdrawals that you take out of your account. That's one way. And then potentially taxes on Social Security being increased. So let me tell you about what I'm concerned about. Many of you have built up IRA accounts, right? You were told, look, stuff money away in these tax-deferred accounts, meaning you don't pay taxes on your IRAs until you take money out. And of course, when you retire, you're going to retire poor and you're not going to need that much money and blah, blah, blah. And so the assumption was when we take money out, we'll maybe be in a lower bracket. But quite honestly, most of my clients find that they're continuing in their lifestyle right into retirement. And remember how it is during your working years. What are the days of the week you're spending most of your money on? The discretionary money. Well, that tends to be weekends, doesn't it? Well, what's a retirement? It's a big, long weekend, and discretionary spending will go up, and you need to plan for that. And so recognize that it is likely you will continue to spend at the same rate, but will not have the same deductions you had when you were working, such as the children that you used to deduct, or perhaps mortgage interest if your house is paid off, and so on. And then some of you, if you become single or widowed or divorced, are going to discover that there is an onerous tax on being single in this country. Single tax rates are just not fair because they're quite a bit more than married filing jointly. So all that to say, you have a partner in your IRA, 401k, 403b, 457 plan, any of the tax-deferred plans that we've been told to build into. You also have the potential, once you start taking money out of your IRA, etc., that money is going to create greater taxation on your Social Security. You see, as you take money out, everything you take out up to, but not at the level of $25,000 for most families, is going to be no additional tax on your Social Security. But once you hit that $25,000 mark for married couples, and of course, as I told you, all these brackets are less favorable for singles, then you start to see taxes not only on the money you took out, but also on your Social Security. So let's just use one example. The maximum benefit today, right now, that anybody's taking on Social Security, if they retired at full retirement age, is $3,627 per month. Okay. Now you'll get more if you wait till 70, but let's assume you got that benefit. Let's say you're a household of 2. Well, you could double that. So now you've got $7,254 a month. That's a pretty healthy income from Social Security if you both had full careers. What I tend to see is one spouse tended to focus on the kids, and there's a little smaller benefit, maybe half. So somewhere from in the range of from $60,000 to $87,000 of income coming to you from Social Security if you really maxed out your contributions over your lifetime. You say, well, that's actually not bad. No, it isn't. The people that are bashing Social Security are really not understanding that we get pretty good benefits out of that program. But you could take an additional $25,000 as a married couple on top of that and not experience taxes on your Social Security. So that's not bad. Your taxable income would only be $25,000 or $24,999. But let's say you go above that. Well, now you could be paying taxes on half the benefits. So if you were earning $87,000, you would pay taxes on $43,500. Okay, so now taxes enter the picture on your Social Security benefits. Did you realize that? That your Social Security check, which you always thought was a tax, can be taxed? It's a benefit. It's not a tax. And then once you get beyond that, above $34,000, you're going to experience taxes on up to 85% of your benefit. So really quite a concern for my clients, something that I have on my radar and that I want you to get taken care of is developing a strategy so that you don't have more than $24,999 of income on top of your Social Security check. You say, are you going to cap our lifestyle, Colin? Are you going to make us live at a certain level? No. What we're going to talk about in our next segment is how to start building a tax-free retirement so that you can take other money, virtually unlimited and tax-free, and never impact your Social Security benefits. This is a critical part of planning, and it's what we do at Lord & Richards. Because what we do is we come alongside of you and we help you develop a plan to be financially independent and in control. And that includes not overpaying for taxes. Well, folks, I'm visiting with people just like you every single day, and I and my team would love to have a conversation with you. It just starts with a simple phone call.